As the days get shorter and our utility bills go up, it never hurts to be on the receiving end of those power company profits. Hold on to your seatbelts, folks. This is going to be a good one. The utility sector can be a compelling investment opportunity due to its inherent stability and consistent demand. Utilities provide essential services that are fundamental to everyday life and the broader economy. As a result, these companies often enjoy a steady revenue stream regardless of economic downturns. They tend to be, well, recession-proof. Moreover, many utilities operate under the umbrella of regulation within their regions, reducing competitive pressures and ensuring predictable returns. This can also go a long way towards reducing their overall volatility. Most utility companies have some half-decent dividends, which can make them great candidates for total return stocks. You hopefully all know by now how much I love a total return scenario. Join the conversation. Let us know in the comments if you currently have any utility sector stocks. Your participation is, of course, well appreciated. Don't forget to like and subscribe to stay up to date on the future content, and a huge thank you for that click. For today's list, in terms of qualifiers, the stocks of course need to be in the utility sector, and they also have to have a positive return on equity, and I'm looking for positive returns for 2023. The stocks on today's list are sorted by their total returns in 2023 thus far. So without any further ado, let's do this. Kicking off this list, we have at number 5, Hydro One, with a ticker of H. Not to be confused with hydrogen, this company is based out of Toronto and they operate regulated transmission and distribution assets in Ontario as they provide electricity to more than 1.5 million households. They have a market cap of $22.25 billion and a very stable beta of 0.27. That's regulation for you. Their earnings per share come in at 1.72 and they've got a price to earnings ratio of 21.59. That return on equity, it comes in at 9.12%. Their debt to equity ratio, that comes in at 131.49%. Switching over to their dividends, they do have a dividend yield of 3.192%. That is paid out quarterly in the amount of 29.6 cents per share. They've got a payout ratio on that of 66%. Looking at their returns, on their 3-year return on investment, that comes in at 31.66%. Factor in the dividends, we get a total return of 44.20%. On the 1 year, their return on investment, that comes in at 6.17%. Adding in the dividends, we get 9.47% on the total return. For 2023, their return on investment, it comes in at 1.95%. Adding in those dividends, we get a total return of 4.34%. I will add that the province of Ontario is a huge stakeholder in this company as they hold 47% of their common equity. That's not too shabby. Coming in at number 4, we have the smallest stock in today's list with H2O Innovation Inc. They have a ticker of HEO. They are based out of Quebec City and they provide water treatment, membrane filtration services, and other specialized water products and services. They do have clientele in Canada, the US, as well as some international customers. They have a lower market cap of $247.52 million. Their beta, still less volatile than the market average, comes in at 0.74. Their earnings per share comes in at 0.03, and they have a price to earnings ratio of 91.67. That's the highest you're going to see in these price to earning ratios today, and that is a good indication that this is a company that is growing. Their return on equity, that comes in at 3.52%, and they have a debt to equity ratio of 70.25%, which is not that bad. These guys are the only ones on the list today who do not have a dividend, and once again, they're growing. That's why. So when we look at their return on investment, for the 3-year return on investment, we get 97.84%. On their 1-year return on investment, we get 36.82%. And so far in 2023, their return on investment comes in at 5.36%. This is a penny adjacent stock, but it does have a lot of potential, which is why it made this list. Taking our 3rd spot, we have TransAlta Corporation with a ticker of TA. They are based out of Calgary and they are an electricity power generator and wholesale marketing company with customers in Canada, the US, as well as Australia. Their market cap comes in at $3.32 billion, and their beta is a wee bit more volatile than the market average at 1.07. Their earnings per share come in at 0.96, and they have a price to earnings ratio of 13.18. Their return on equity comes in at 18.75%, and when it comes to their debt to equity ratio, it's on the high side at 190.63%. Dividend-wise, they have a dividend yield of 1.739% that is paid out quarterly in the amount of 5.5 cents per share. Their payout ratio on that comes in at 22.40%. super sustainable. When we look at their returns, on the 3-year return on investment, it comes in at 60.33%. Factor in those dividends, we get 67.76%. On their 1 year, their return on investment, it comes in the negative at negative 0.32%. Factor in the dividends, we're back in the positive at 1.38% for a total return. For 2023, their return on investment so far this year is 4.46%. Adding in the dividends, we get a total return of 5.82%. With 76 power plants in Canada alone, this is a company that could very well shine in your portfolio. In our almost top spot at number 2, we have Fortis with a ticker of FTS. They are based out of St. John's, Newfoundland, and they are a utility transmission and distribution company that operates primarily in Canada and the US with over 3.4 million customers. They have a nice looking market cap of $27.48 billion, a super stable beta at 0.20. Their earnings per share come in at 2.96, and they have a price to earnings ratio of 19.09. Their return on equity comes in at 7.20%, and they have a debt to equity ratio of 127.31%. Their dividend yield comes in at 4%, and that's paid out quarterly in the amount of 56.5 cents per share. They have a higher payout ratio of 75.34%. Fortis is also on the verge of becoming Canada's second dividend king, which means they are one dividend hike away from 50 consecutive years in a row of raising that dividend. That's not too shabby. When it comes to their returns, on their 3-year return on investment, that comes in at 4.63%, but with that healthy dividend, it takes the total return up to 16.52%. On the 1 year, the return on investment came in at 0.64% for a total return after we add in the dividends of 4.67%. So far this year in 2023, they have a return on investment of 3.48%. Factor in the dividends, we do get a total return of 6.58%. Fortis does hold the distinction of being the first ever stock I purchased. Yay, Fortis. In our top spot at number 1, we have Alta Gas Limited with a ticker of ALA. They are based out of Calgary, and they operate a rather diversified basket of midstream power and utility infrastructure assets. Their market cap comes in at $7.60 billion, and their beta is a little more volatile than the market average at 1.29. Their earnings per share come in at 2.06, and they have a price to earnings ratio of 13.10. Their return on equity, that comes in at 9.08%, and their debt to equity ratio, that comes in at 110.58%. The yield on their dividend, that comes in at 4.151%. It is paid out quarterly in the amount of 28 cents per share, and they've got a payout ratio of 39.32%. Looking at their returns, on the 3-year, their return on investment came in a very nice looking 63.52%. Factor in that dividend, we get 77.55%. On the 1 year, they did slip a little. They had a return on investment at negative 5.99%. Adding in the dividends, we're still in the negative at negative 2.14%. Now, in 2023, it looks like they've done some recovery because their return on investment came in at 14.81%. Adding in the dividends, we do get a total return in 2023 of 18.38%. This is another solid company, and they certainly look poised to continue producing profits in the future. These are some great looking utility sector prospects that, in my opinion, are worthy of some further due diligence. This is a sector that will typically do well, and we are heading into the colder months, so they may be in for a pump or two along the way. Of course, if you are interested in any of these stocks, be sure to do your own research before you consider dropping any of your hard-earned cash on the table. Kicking off this list, we have at number 5, Hydro Ottawa. Keep the learning going. Watch my video on Rogers or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner, and I will see you in the next video.